Loving students, this is EZRA, your accountancy teacher. May God bless us all with all His blessings. Let us go to the next sum, that is third sum given in the page number 74. Shall we go? Before going to do the sum, let me tell you one thing. In accounting equation, the thing which you have to remember is that incomes and profits should be added. Incomes and profits should be added to capital, and expenses and loss should be subtracted from capital. These two things you have to remember. And another thing, what is going on in that transaction should be known to you. You have to be very clear about the transaction. Then first write the equation first. Assets is equal to capital plus liabilities. This is the first thing which you have to do, and this will not carry any marks, but this will give you an idea. Shall we go to the sum? Prepare accounting equation for the following transactions. Murugan commenced business with cash 80,000. See, there is no liability. Cash is brought in, and that is the capital. So this is the accounting equation. Cash is equal to capital. What is that amount brought? 80,000. 80,000 is equal to 80,000. Here you have to write the transaction. What is the transaction? Commenced business with cash 80,000. See the next one. Purchased goods for cash 30,000. Write the transaction first. Transaction. Purchased goods for rupees 30,000. What does this mean? We have given cash and we have brought goods into the business. So there will not be any change in the capital. Why? It is not purchase of goods. It's not an expense or a loss or an income or a profit. So there will not be any change in the capital. One asset is converted into another asset. Now there are two assets, that is cash plus stock. There will not be any change in the capital. There will be change in the capital because we have taken 30,000 rupees from the cash. What is the cash? 80,000. From 80,000 we have taken 30,000 and we have brought stock 30,000. There will not be any change in the capital, that is 80,000. Say here 50,000 plus 30,000 is equal to 80,000. Now what is the accounting equation? Cash plus stock is equal to capital. 50,000 plus 30,000 is equal to 80,000. And let us go to the next transaction. Salaries paid. Transaction. Salaries paid by cash 5,000. First understand this. It means salary is an expense. So this amount should be subtracted from the capital. This is one thing. And another thing is we have taken cash from the cash. So what are the items that will come here? That cash plus stock is equal to capital. From cash we have taken 5,000. There will not be any change in the stock. It remains the same 30,000. Here capital from 80,000 we have to subtract that 5,000 because it is an expense. I have already told you that expenses should be subtracted from the capital. Now what is the amount? 45,000 plus 30,000 is equal to 75,000. Now cash is 45,000, stock is 30,000, capital is 75,000. And next one, bought goods from Kumar. You have to write the transaction. Bought goods from Kumar for rupees 5,000 and deposited the money in CDM. I don't have space, that's why I am writing like this. See, now you have to understand the transaction. CDM, the money is deposited in the CDM. You know the meaning of CDM, cash depository machine. See, what do we do there? We take cash and put the cash in that machinery, and his account, the person to whom we have to pay, his name will be typed and his account number and the bank will be typed. We have to keep the cash there and it will be taken. In this way, it means actually we are paying cash from our packet, from our cash. So now let us see. Bought goods from Kumar. So goods come into the business. There will be change in the stock. Now let us go for the items. Cash plus stock is equal to capital. I have already told you purchase is not an expense, so that should not be subtracted. See, from cash we have to pay that 5,000. 45,000, from 45,000 we got to subtract 5,000. And stock, already there is stock worth rupees 30,000. Now we have brought stock from Kumar. So add that 3,000 and there will not be any change in the capital because purchases is not an expense. Now let us see. 40 plus 35 gives you 75. What is the equation? Cash plus stock is equal to capital and the amount is 40,000 plus 35,000 is equal to 75,000. And let us go to the next transaction. Introduce additional capital of 10,000. You have to write the transaction. Introduced additional capital of rupees 10,000. Understand the transaction. He has brought in money. So, and another thing is, it is added to the capital because it is brought in the form of capital. So, what will be the changes? Cash, stock is equal to capital. He has brought in cash 10,000. So, with the 40,000, you have to add that 10,000. There will not be any change in the stock. So, stock remains the same. Capital, with 75,000, you have to add the additional capital brought. Now, say 40 plus 10, 50,000 plus 35,000 is equal to 85,000. What is the accounting equation? Cash plus stock is equal to capital and the amount is 50,000 plus 35,000 is equal to 85,000. See, now you may understand the difference between the solution given in the book and the way in which we prepare. There is no difference at all. They have given in the form of tables and whereas we have removed that tables. Just it would be easy. At the beginning you need not prepare lines and tables. Here it will be very easy. Directly you can prepare the go for writing the solution. Hope you have understood. Let us go to the next sum. Fourth sum. Shall we go? What will be the effect of the following on the accounting equation? First one, Sunil started business with 1,40,000 cash and goods worth 60,000. See, first you have to write the accounting equation. Assets is equal to capital plus liabilities. Remember, this will not carry any marks. And then write the transaction. Sunil started business with cash. With cash, how much? 1,40,000 and stock 60,000. See, cash comes into the business and stock comes into the business. Both are assets. What is the equation? Cash plus stock will be equal to capital. And what is cash? 1,40,000. What is the stock? 60,000. Then what is the capital? 2 lakh. This will carry marks, whereas this will not carry any marks. The next one, purchased furniture worth 20,000 by cash. Write the transaction. Transaction second. Purchased furniture furniture 20,000 by cash. First, you have to understand the meaning of the transaction. We have taken cash from the cash and we have given the cash and we have bought furniture. So, there will be three assets. One is cash, second one is stock, and the third asset will be furniture. There will not be any change in the capital because buying furniture is not an expense. So, cash 20,000 should be removed. Stock 60,000, furniture 20,000, capital remains the same. See, 1,20,000 plus 60,000 plus 20,000 gives you 2 lakhs. Now, what is the accounting equation? Cash plus stock plus furniture is equal to capital. Cash 1,20,000, stock 60,000, furniture 20,000, capital 2 lakhs. Now, let us go to the next transaction. Depreciation on furniture 800. Depreciation on furniture rupees 800. Depreciation on furniture 800. Here, I must tell you one thing about depreciation. Still, there is a debate whether depreciation should be treated as an expense or loss. Anyhow, even if it is treated as expense, that should be subtracted from capital. And even if it is treated as a loss, that should also be subtracted from a capital. Remember, depreciation means the loss of money value. So, this depreciation amount should be subtracted from the value of furniture. Again, it is a loss or it is an expense. So, that should be subtracted from the capital also because expenses and losses should be subtracted from capital. Now, let us go for the assets. Cash plus stock plus furniture gives you capital. Now, let us write. There will not be any change in the capital. That is cash. That is 1,20,000. Stock. There will not be any change. Whereas there will be change in furniture, that is from 20,000 we have to subtract that depreciation 800, and from that capital 2 lakh you have to subtract that loss 800. So, the amount will be 1,20,000 plus 60,000 plus 19,200, which is equal to 1,99,200. 160, 120, 180, 190, 200, 199, 200. Yeah. And what is the equation? Cash plus stock plus furniture is equal to capital. What is the amount? 1,20,000 plus 60,000 plus 19,200 is equal to 1,99,200. This is the equation. And see the next transaction. Deposited into bank 40,000. You have to write the transaction. Deposited into bank. What is that amount? 40,000. Here you have to understand the transaction. What does this mean? You have taken 40,000 from the cash and you have deposited in a bank. So, new asset comes in, that is bank. Bank means amount deposited in a bank. So, what are the assets? Cash plus stock plus furniture plus bank is equal to capital. See, depositing in bank will not affect capital because it is not an income, a profit, an expense or a loss. So, that capital will not be affected by this transaction. So, cash will be affected because from cash we take 40,000. There will not be any change in the stock, 60,000. There will not be any change in the furniture, that is 19,200. That will not be here. Bank, we have deposited 40,000 in a bank and there will not be any change in the capital. That remains the same, 1,99,200. See, cash 80,000, 60,000 plus 19,200 plus 40,000 is equal to 1,99,200. Now, what is the accounting equation? Cash plus stock plus furniture plus bank is equal to capital. Cash is 80,000, stock is 60,000, furniture is 19,200, bank is 40,000, and there is no change in the capital. Yeah. Now, let us go to the fifth transaction. Paid electricity charges through net banking 500. Paid electricity charges 500 through net banking. Here you have to understand the transaction. Electricity charges, it is an expense, so understand that 500 should be subtracted from capital. And another one is net banking. What do you mean by net banking? We do not take cash from our cash. The bank will pay that amount. So this amount should be subtracted from bank. So first let us write the items involved. Cash plus stock plus furniture plus bank is equal to capital. Now, cash, there will not be any change in the cash. So, that remains the same, cash. Stock, there will not be any change, 60,000. Furniture, there will not be any change. In bank, there will be a change because the bank has paid the amount. So, what is that amount? 40,000 is the bank amount. From 40,000, we have to subtract that 500 is equal to, remember, this is an expense, so that must be subtracted from capital. What is that capital? 1,99,200. From this amount, you have to subtract 500. Now, let us go for writing the amount. Cash, 80,000. Stock, 60,000. Furniture, 19,200. Bank, 39,500, which is equal to 1,98,700. If you have any doubt in these means, you have to add these things and see the amount. When you total these, when you sum up these amount, you must get this amount. If it is correct means we have done it correctly. Now what is the accounting equation? Cash plus stock plus furniture plus bank is equal to capital. And the amount is 80,000 plus 60,000 plus 19,200 plus 39,500 is equal to 1,98,700. What is the next transaction? See the next transaction. Sold goods to Ravi costing 10,000 for 15,000 rupees. You have to understand the transaction. It means we have taken goods worth rupees 10,000 from the stock and it is sold to Ravi and it is sold for 15,000 rupees. So there is a profit of 5,000. Remember, it is a profit. That profit alone should be added to capital because incomes and profits should be added to capital. And remember, Ravi has not given any amount. So he becomes a debtor. D-E-B-T-O-R, debtor. So we have not collected any amount from him. So Ravi becomes the debtor. Now let us go for writing the item. First one, cash plus stock plus furniture plus bank. Now we have got one more asset, that is debtor, and which is equal to capital. Now we go for writing the amount. There will not be any change in the cash because we have not received any amount from Ravi. And there will be change in the stock because from the stock we have taken goods worth rupees 10,000. We have taken goods worth 10,000. Remember, you should not consider the amount for which it was sold, whereas you have to consider the amount of stock, value of the stock taken from the stock. The value is 10,000. Only take that value. And furniture, there will not be any change in the value of furniture, 19,200. There will not be any change in the bank value, 39,500. Now Ravi has become a debtor and he has to give us 15,000. Remember, with the capital there is a profit of 5,000. We have to add that 5,000 to the capital. What is that capital? 1,98,700 plus 5,000. You have to add that profit to the capital. Now go for writing the amount. 80,000 plus 50,000 plus 19,200 plus 39,500 plus 15,000 is equal to 2,23,700, and this is capital. See, now the accounting equation is cash plus stock plus furniture plus bank plus debtor is equal to capital, and the amount is 80,000 plus 50,000 plus 19,200 plus 39,500 plus 15,000 is equal to capital 2,23,700. This is the accounting equation and this is the amount. Let us go to the last item, goods written by Ravi. Transaction G. Goods written by Ravi. Goods returned by Ravi, rupees 5,000. See, you have to understand the transaction. Ravi has borrowed goods from us on credit, so he becomes a debtor. Now he has returned the goods. What shall we do here? We take this goods worth rupees 5,000 and that should be added to the stock, because that goods have been returned. So see, first write the items: cash plus stock plus furniture plus bank plus debtor is equal to capital. See, goods are returned. There will not be any change in the capital, because goods returned is not an income, a profit or an expense or a loss. So there will not be change in the capital. There will be changes only here, that 5,000 should be added to the stock, because goods returned will be added to the stock, and from the debtor we have to subtract 5,000, because he has returned goods worth rupees 5,000. So there will not be any change in the cash. It remains the same, 80,000. There will be a change in the stock, because Ravi has returned the goods and that goods will be added to the stock, that is 5,000. Furniture, there will not be any change. Bank, there will not be any change. Debtor, there will be a change, because he has to give us 15,000. Now he has returned goods worth rupees 5,000. And there will not be any change in the capital. Now let us adjust the amount. Cash 80,000, stock 55,000, furniture 19,200 and bank 39,500, debtor 10,000 is equal to 2,23,700. And the accounting equation is cash plus stock plus furniture plus bank plus debtor is equal to capital. This is equation, and the amount is 80,000 plus 55,000 plus 19,200 plus 39,500 plus 10,000, which is equal to 2,23,700. And my dear students, the only thing which you have to do in this accounting equation is you have to understand the transaction. What is going on in the transaction, whether money comes in or money goes out, whether it is the transaction is an income or profit or expense or loss. Then incomes and profits should be added to the capital, and expenses and losses should be subtracted from the capital. The main thing is what is going on in the transaction should be known to you, and hope you will do it correctly. Hope you have understood the concept of accounting equation. By the grace of God, let us meet in the next class. Thank you.